Chris Whalen, Whalen Global Advisors chairman, investment banker, author of the Institutional Risk Analyst, and one of the best independent analysts you will find on Wall Street, and certainly a friend of this show, and we're pleased to always say a regular contributor. Great to see you as always, Chris. Looking forward to kicking off the month of November with you. Thanks for joining us again.
Indeed, day before Election Day.
Yeah,
Couldn't get better.
This is the Election Day episode. Of course, we are recording on Monday, November 4th, but we will be airing this on Tuesday, November 5th, Election Day. And gosh, last week we had a bunch of economic data that came out right before folks hit the polls. So let's kind of step back and frame it up where we always start with that big picture, more of like the macro view, where we are as it relates to the economy and markets. And as you know, Chris, you can take all the time you need to set the table.
Well, I think the place to start is obviously interest rates. The Fed made a pretty dramatic cut in September. However, the economic data since then has somewhat contradicted that view. I think there's still a muddy picture regarding the economy. You've got a lot of our friends out there pounding the table, predicting recession and doom and gloom. But on the other hand, consumption, job creation, everything else are still okay. Pick the number. You can get a bad number or a good number depending on which one you pick. And I think that makes life a little bit difficult for the Fed in terms of future policy, and the markets reflect this. Since September, we've backed up, Treasury yields and also mortgage interest rates. We're staring at almost 7% mortgage rates today compared to 6 or even lower 30 days ago. So, it's a muddle. I think there's no clear direction for people in terms of where the economy is headed. Credit is still pretty benign, other than commercial. And the thing that I've noticed, Julia, is there's a lot of money around. There is so much money chasing different opportunities in the market, credit, what have you, private equity. We have Warren Buffett sitting on $300 some odd billion in cash. He just doesn't see anything out there he wants to buy. So I think it is a funny time. We have not defeated inflation. Let's put it that way.
Yeah. I was going to ask you, I saw the note you put out on October 23rd, just about how bond yields have backed up more than, since 1995. What does that say about what's happening when you see that move in yields? Just, I'm trying to understand and wrap my head around it. And I feel like you're the person who's best suited to explain this.
I think what it's telling you is that there's a huge speculative group trading Treasury bonds right now. It's not like the old days of 2008 when the primary dealers acted as a buffer in terms of interest rate movements. Since that time, we've had more and more funds and offshore investors supporting the market for Treasury issuance, and they tend to take a view. So after we saw the Fed cut and some economic numbers came out, next thing you know, we have this huge short position building up in Treasuries, and that took yields up. What are we going to do now? I think after the election, you'll have a bit of a relief rally. You'll probably see 10s come inside of 4% again. But I am not that sanguine about the long term because Treasury still has to go out and raise money. And again, we still don't have a clear direction. It's not like the chairman of the Fed can get up there and say, I'm worried about jobs. That's kind of where they were headed in September. But I don't think they have a clear path right now.
This episode is brought to you by Public.com. Public.com has just announced its new bond account, offering a 6.6% yield on your investment until 2028 when the first bond matures. Here's why it's interesting. Bond yields have been at their highest levels since 2009. However, the Fed just announced its first rate cut and more are on the table. In fact, current estimates from the CME FedWatch suggest rates may fall as low as 3% by the end of 2025. The good news, investing in a diverse portfolio of corporate and high-yield bonds could lock in today's historically high yields, even if the Fed cuts rates. That's why Public.com created the bond account. It's a new way to invest in bonds and earn a 6.6% yield on your investment for the next 4 to 5 years. Go to public.com/Julia to learn how to lock in a historically high yield on your portfolio. The bond account, only at public.com/Julia. I want to hear more on that. more of your outlook on bonds and being not so sanguine? Just flesh that out a bit more for us.
Well, if you're one of the larger players in treasuries today, it's a carry trade. It's a leverage trade. And it's well over $1 trillion now. We wrote about this the other day. So I think for the Secretary of the Treasury and the Fed and all the other players who are looking at those markets, the movements have to do more with the speculative positions that the players, the hedge funds and others are willing to put on than it is about, fundamental economics. It's not like 20, 30 years ago when basically interest rates were the province of the Fed and investors. No, today you have people who are using leverage to bet on which way treasuries are going to move next, particularly the longer dated paper. Mm-hmm. So that's the one hand. And then on the other hand, you have the Fed taking a fairly passive role in the markets. They are running off their treasury securities. They're not running off their mortgage securities. And that has created some asymmetries in the market that I think Powell or his successor will have to deal with. If Donald Trump wins tomorrow, I think Jay Powell's going to resign. I think you'll see a couple open spots on the Fed board. But I've suggested to people that if, we see any progress on the deficit coming out of this election, I think you'll see rates fall because there's so much liquidity out there, Julia.
Yeah. Okay. So if we do make some progress, we could see rates fall on the deficit.
Yes.
Okay. I do want to hear a bit more on that because
wouldn't that be remarkable? We could stop talking about the Fed for a while.
Do you think that's, likely? Is that something that could actually happen? Because I feel like both candidates want to spend. So how do you?
Well, of course they do. Americans always want to spend rather than raise taxes, especially if you have to get reelected. That's a common problem that's been with us for 200 years. But I really think that we're at the point where any politician or group of politicians in Washington that start focusing on fiscal issues are going to get traction. Nobody wants to see cuts. Nobody wants to see our standard of living reduced. But if you look around the world, there's not a single industrial country that is not feeling the bite of debt, that's not feeling the constraints of debt and inflation. And even Japan, they've actually gotten up off the floor. They just had a very surprising election there where the ruling party lost. And I think, it's going to become topical to talk about the deficit again. The Democrats obviously don't want to do that. Mm-hmm. But I do think the Republicans are going to have to make a stand because otherwise we have problems.
Yeah. How about, there's, Elon, the talk of Elon Musk setting up the Department of Governmental Efficiency, DOGE, clever naming there.
We could use the dog as a symbol, right?
There you go. Well, it'd be recognizable for sure. But what do you make of that?
It's very necessary. When you have as many wars and military engagements as the United States has around the world, you're going to waste a lot of money. And what we're talking about is wasting trillions of dollars. The nice thing about Elon Musk is he's a defense contractor. He understands. So I wouldn't mind turning him loose at the Department of Defense to see if we couldn't save 5 or 10% of total spending, because there's at least that much waste, Julia. Mm-hmm. The way the U.S. wins wars is by burying our adversaries in logistical capability. We oversupply everything, right? And, you hear lots of arguments today about whether or not we should have trade barriers and everything else so we can produce what we need at home. But the reality is Americans win wars because we're really good at logistics. So I think Musk actually might contribute something if he were to focus on that part of the budget and see if we can't save some money.
Yeah. One of the things I've learned on the show, I think this is the number, but it was like in the last month since I had you on, I've had Eric Basmajian on, I've had Professor Steve Hanke, was just the percentage of GDP, the percentage that is attributed more to government spending. I think it was around 35%. Might have to get fact checked on that. But I was pretty amazed at just how big of a percentage and the direction we're headed. And it kind of also makes me wonder when I look back, we had the GDP print, like how much of it is really, how much of it is really just more of the government spending side of things? And what does that say about the real health of the economy? I get we have to have some government spending. That is a necessary thing, roads and all those things. But it does make me wonder the direction we're headed, just the percentage of government spending.
Oh, no, you're asking the right question, Julia. Government spending in the U.S. is no more efficient than it is in communist China. Most of it is transfers from one party to another. The government doesn't really invest. When government gets involved in encouraging investment, for example, electric vehicles under Joe Biden, it becomes a disaster. The amount of money that's been lost on EVs by private sector firms. Look at Ford Motor. Look at the money they flushed down the toilet with EVs and electric pickup trucks and everything else. There's no market for these vehicles yet. They're just not practical. But you can't tell that to the progressives because they said, oh, well, we have to do this. So, it's unfortunate, but all politicians want to get involved. They want to put out press releases. And if you look at what's going on in China today with the state and local governments, who are all busted, the central government in China has got to bail them all out. And we're talking hundreds of billions, trillions of dollars of expenditure for which there are no assets. There's nothing to restructure because the money's gone. It's just gone. And in the U.S., the same thing is the case. We transfer money from one to another. We have obviously military spending and that sort of thing. The defense sector is very much tied to the government, obviously. But I think that what you have to realize is that all governmental spending is essentially a transfer. There's very little residual assets left over as a result. And, it's just the nature of the system. America's been that way since the Civil War. When Abraham Lincoln decided he could issue paper money to pay for the conflict, that was really opening the door for a lot of expenditure in the U.S. that we see today. So that number, a third, I think that's too low. It's probably closer to half.
Whoa, yeah. Well,
but it's only the private sector that creates jobs, that has real leverage in terms of being built on real assets. The government sector is just expenditure. That's all it is.
Yeah. And I wonder too, if you get to a point where it is call it half, wouldn't you just have to do mass layoffs in the government sector? But then I imagine that could have effects too and be more recessionary as well. But it is a little worrisome to me when we get.
Oh, I have a list. Trust me, if Trump wins, I got a whole list of people in the housing sector who should return to the private sector. Let's put it that way. We'll start at Ginny
clean house. Yeah.
No, God, the people they have put in positions of authority, important positions in places like HUD, are just astounding. I can really think of only one or two people in the entire Biden administration that are really competent in terms of their job responsibilities. The rest of them are decorative.
Yeah.
They look good, they sound good, but they have no idea what they're talking about.
Well, it's more like a comment here, but I feel like we would be really lucky if we had someone like you in a position. I'm just throwing it out there. And I think people in the comment section they've felt the same, if you ever get that call to serve, but we would be lucky to have someone such as yourself.
I grew up in Washington. I could do it again. But, we used to, if you look 100 years ago during the Depression, both Democrats and Republicans, we had some very impressive people. Mm-hmm. Look at Carter Glass, the Democrat Treasury Secretary, who was the war czar under Wilson. These were very smart people who understood business and finance. Today, we have people who are caricatures, who really have no real world experience. And that's why I think, you're going to see Trump do very well, even if he doesn't win tomorrow. I think the Republicans could take both houses of Congress because of some of these issues.
Interesting. Yeah. Okay. Let's talk about the election. I know we've talked about how you've been seeing it play out. I think the base case for the last several episodes we've had you as a Trump victory, but I do want to step back, since, it seems like there's always changes constantly. Where are you today? Where do you stand today, the day before the election?
I think it's going to be very interesting. I think Trump is going to probably take Pennsylvania and Ohio. Mm-hmm. Why? Blue-collar workers. He appeals more to blue-collar workers than the Democratic candidate. That's a real sea change. When the Democrats can't rely on blue-collar workers in states like Ohio, even Wisconsin. Imagine if Wisconsin is competitive. That's extraordinary. Yeah, imagine if Sherrod Brown gets knocked out in Ohio. What that says is that there's a big change going on underneath with the electorate. And if the Republicans become the party of working people, and the Democrats end up being the party of government and public sector unions. I don't know what that looks like going forward, because the Democrats will have a smaller base of large blue states on either coast, and in the middle will be red. This could be a very interesting development. I think that's what the polls are telling us.
Yeah. Do you think we'll find out? Do you think we'll have a winner by tomorrow evening into, I guess, Wednesday morning or whatever, depending on the time that things get called?
I don't know. We're having a party. We're inviting neighbors over to fight with each other. Why not? We'll get takeout. But no, I really don't know. You can't rely on the public polling. The polls are all over the place. They give you some idea of direction, but they're usually wrong on the magnitude. So, I'm going to sit there and wait. When Trump got elected in 2016, as soon as he won Pennsylvania, I went to bed. And my wife got all angry at me. She said I needed to stay up. But, she's a new American. She became an American citizen 6 years ago.
Yeah.
So I appreciate her focus. But, if I see Trump winning Pennsylvania and Ohio, then I'm going to go to bed again. Me and the doggies will go to bed.
Yeah. Okay. You know what? On the polling, no one's ever called me. I'm 36. No one, at least maybe I don't answer my phone then, but no one's ever called me to participate in a poll, which I find kind of
nobody
weird.
answers their phone. There was a great tweet yesterday. How do we do public opinion polling when no one answers their phone?
I just kind of assume they must call landlines or something. I'm like, because nobody's calling me, but I have I sit in North Carolina. My inbox is ridiculous. People ask me for votes and this and that. Like, and on my actual mailbox, it's like I got a lot of love letters from people.
Do you pick up a call if it's not in your contacts? No.
Yeah. You know what? I used to when I was a reporter with the assumption of like it could be a source, but yeah.
Sure.
Yeah. No. But no one's ever. I've yet to participate in a poll, so y'all call me next time.
Well, because we get buried in marketing calls, political calls, everything. The amount of calls and texts that I've been getting here in New York, which is kind of surprising, right? New York couldn't be competitive at all. But I think it's going to be more competitive than people think. Very interesting. I think Trump will do well with Latino voters in New York.
I'm registered independent sitting in North Carolina, so I'm like, I'm very popular. The people are trying to.
Oh, yeah. They want you.
Yes, they want me. Exactly.
I don't know why anybody's calling me. I mean, good Lord.
Yeah. Okay. So you mentioned it is a funny time. I want to hear more on that. Like a funny time in the markets. You also point out Buffett. You're right. He does have and he has for several years, but now it's an even bigger cash pile. I think 325 billion or something. And he's also been selling Bank of America. I know he still has a huge position there, but I mean, I do want to hear more. Do you have any thoughts on Buffett selling Bank of America since you are a bank analyst?
Well, Bank of America has not been performing very well. We just rebalanced our bank index. We look at the top 100 or so institutions in the U.S., and Jamie's at the top. Wells Fargo's in the top quartile. Bank of America is kind of in the middle. They're still not performing that well financially. They have a huge following on Wall Street in terms of people that want to own the stock. But the reality is that Brian Moynihan's just not a very good manager. And so his financials have always been mediocre. And then we have Truist and Citi down in the bottom quartile. They have not been performing well at all. So, when you think about a Warren Buffett, he wants to put money to work in a large public company where he has liquidity. Jamie Dimon's probably too expensive for Warren. There's no real value there because he's already leading the pack. Warren wants to buy a company that's kind of cheap today, but it's going to do better. What do? You go out and buy Boeing. You go out and buy, any number of companies that, fell during the last couple of weeks during earnings, right? Look at the volatility we saw in some of these stocks, Julia. They had even the most modest disappointment. Someone like PayPal, that's $100 billion market cap stock, right? Got crushed after they announced earnings. And there's all sorts of examples in pharma, in other areas where, for whatever reason, the street bid the stock up before earnings. There was, something wrong with it, right? And the next thing you know, the stock's off 20, 30%. So what we're seeing is volatility in markets. And I think it's very difficult for investors to really discern value today. It's tough. That's the question I get asked the most by some of my readers. They're like, Chris, what should we do? So you may have noticed we're going to start doing a conference call for some of our subscribers because they keep sending me questions. And I figure, well, we might as well just deal with all this at once, right?
We'll
But
definitely have
I
to let
think
us know.
it's difficult for, people are so used to following the Fed, really going back the last 10 years. If you followed the FOMC minutes, you pretty much knew what was going to happen. You knew that rates were going to stay low and equities were going to melt up, right? That's not so clear now. So I think, to me, I want to be in the winners. I want to be in the best performing stocks in every sector I look at. So I'm not so keen on NVIDIA right now, just for my own portfolio, but I have been buying AMD, ARM. I love ARM. I've been following that company since it started. I've been in and out of the stock. I think their position in tech is going to be very interesting going forward. They're in a bit of a dispute right now with some of their partners. And it's because they ultimately control a lot of that small technology that goes in phones and everything else.
Okay. So wait, that's ARM, ARM, the ticker holding, ARM Holdings?
Yeah,
Or
that's
ticker
right.
symbol.
They
Okay.
make low power cores for silicon, very important pieces for everything.
You mentioned like folks used to be, it was you could just follow the Fed, rates were low, equities
That's
melted
right.
up. So is the environment turning more into like, okay, you are going back to that more of like a stock pickers environment versus like, I guess, being more broad
Yeah,
based?
I think so. I'll give you an example. If you look at our bank index, there's only 2 names that have been in the top 10 all year. JP Morgan was one, and East West Bancorp. Great performer. These are consistent, stable companies that deliver earnings. Another one that's been in our top 10 group a lot was Ameriprise. It's kind of a little version of Charles Schwab. Again, knocking it out of the park. It's 8 times book value. It's not cheap. American Express is over 6 times book. So, you look at that and you say, God, it's a great company. I'd love to own it. Of all of them, Schwab is probably the cheapest right now. But these asset managers, or asset gatherers, as I like to call them, perform very well, and they don't have much credit risk. People have been shy about companies that have exposure to consumers because they're worried about a recession somewhere down the road. And you've seen this with banks. A lot of the consumer-facing banks still haven't recovered since, second quarter of this year. And that, I think, reflects the fact that people are not sure what's going to happen with the economy. And so they tend to hide in some of the better performers. Now, does this help Warren Buffett? No, because none of these are big enough for him.
Yeah.
Warren is kind of in the position like some of the hedge fund and private equity guys that you and I know, right? He should give the money back.
Yeah.
But it's so interesting that all over the world, in credit, in tech, in financials, you see people who don't really know exactly what to do. You see a lot of creative destruction going on in certain sectors, or not creative, but really bad destruction, private equity, commercial real estate. Those are areas that people want to avoid right now. But I think that, like I say, it's hard to make decisions about allocation. It's hard to make decisions about direction because we're all kind of up in the air.
And
We've gotten so used to following the guidance from the Fed, and they don't know which way they're going right now.
And that is why, when you described this as kind of a funny time, it's like it's hard to discern the direction.
Yeah, I mean, I read all the stuff that comes out of the street. You and I both know all these people, right? There is no clear direction. There's nobody pounding the table saying, hey, you should go buy this, right? It's just not clear.
Yeah. So let me ask you this then. From an investor perspective, what do you do? Are you sitting on more cash on the sidelines? Like, what does one do when there isn't a clear direction? Are you waiting for more clarity? Just curious. Like, how do you?
No, I buy quality. I try and be consistent. I have about half of my personal nut in preferreds and debt, and the other half in equity. And I think you want to be at least 50-50 because the equity is going to outperform the debt. Ultimately, governments that have lots of debt are going to force rates down. And they're going to punish you if you sit in debt too long. So you got to be opportunistic when you're playing with bonds. That doesn't mean you can't make money. There's a lot of people out there betting on short-term movements in treasuries. But I think for me, I'm still an equity guy. I think that's where I feel most comfortable. I do financials. I follow some of the tech sector because I used to bank that sector. I used to bank semiconductor cap equipment, Julia. It was like a science project every day. Let's go see how much money we can waste. I'll never forget, I worked on one deal where these guys wanted to do chips with copper. And copper is the most difficult element in the world to work with because it oxidizes as soon as it touches atmosphere. How do you make chips out of this, right? Well, you waste a lot of money. But the reason copper was so attractive to some people in semiconductors is because the atom is very small. If you want to make silicon with tiny, tiny features, copper is kind of a cool atom to work with if you can figure out how to do it. Another area I follow is transportation. Obviously, I wrote that book, Ford Men, years ago.
Yeah.
I own Toyota. Why? Hydrogen. I think Toyota may actually figure out a way to use hydrogen for transportation before the other manufacturers. If they do that, that's going to become a tech stock.
That's interesting. Yeah, I have your book, Ford Men, on my bookshelf.
Well, hydrogen is the most fascinating element, and it's also the most difficult because everything it touches, it corrodes. So to contain hydrogen in a vessel so you could actually do stuff with it, right? You remember the Hindenburg. Bad.
Yeah.
But hydrogen is, again, one of the smallest atoms, and it is extremely available. We have tons of it. And if we could use it for all sorts of power applications, it might help to get us where we need to go long term for energy consumption. Solar, hydrogen, both of those would work. Much better than nuclear too, by the way.
Yeah. Okay. So final question for you for today.
Sure.
Putting on more of that analyst hat, maybe more of that risk manager hat as well. What's the one risk right now that is either keeping you up at night or is not getting enough attention? What is that risk for you that's on your radar right now?
I think the upside risk that most people don't recognize or don't want to recognize is that we could see much higher long-term interest rates. This would tip over some of the big banks we were talking about, Bank America. If we had a 10-year Treasury note at 5, Bank America would be in a lot of trouble because their securities yield down in the 2s. So they would be points underwater on funding. And I think that's the possibility that everybody assumes is not going to happen. They assume that the Fed can control this. I think they're wrong. I think that the Powell FOMC has taken far too long to recognize that they need to restructure their balance sheet. We wrote a piece the other day, we put it out on Friday, that said, why doesn't Jay Powell call Sandra Thompson, the regulator for Fannie Mae and Freddie Mac, and start selling some of those mortgage securities into CMOs? Put them away forever. We don't want to see them. The reason you do that is it gives the Fed the flexibility to buy treasuries if they have to. They may have to turn QE on again. And I think that's going to be a shock to the markets. Everybody assumes that the Fed can make it better and it's going to be okay, no problems, right? But what if the Fed loses control and we see long-term rates going higher? That, I think, would spook the market.
Yeah. Certainly. Chris, we always love having you on, and hopefully the next time we have you on, we'll at least know who won the election. Who knows? Yes. Maybe not. But I want to give you the final minute here to let folks know where they can, find more of your work and any parting thoughts that you might have.
Well, sure. I'm Chris Whalen. I publish the Institutional Risk Analyst. I work as a banker, work with a lot of lenders, and I'm also on Twitter at RC Whalen. And for those of you who work in the mortgage space, I publish a column for National Mortgage News, and always happy to hear from you.
And you have a conference call coming up. Do you want to plug that or?
Oh, well, yes. We are going to start doing quarterly calls with the premium subscribers for the blog. They get access to our index as well as the weightings for the stocks in the index, which seems to be very popular. We were thinking about working on an ETF, but I think I'm going to grow grapes for a while instead of making wine. And, all I can say is I'm always optimistic, but I think people need to be cognizant of where we are. And, that's what I always say to people. Look at it again. Don't take the easy explanation. You want to dig and try and figure out what's actually going on here.
Thank you so much. You are so appreciated. We love having you on this show. You are always welcome, of course. And we look forward to you every time we have you each month. Chris Whalen, Chairman of Whalen Global Advisors, author of the Institutional Risk Analyst. Thanks again for your time. And I look forward to seeing you in December. Thanks again, Chris.
Yes. Happy Election Day.
Likewise.